I have all respect for Jay Powell, but the fact is we lost a little bit of control of inflation. Models didn't pick that up.
The 2% inflation, are you there for that?
No, I think it'll take a while. I just don't think
so.
It'll come
Rates
down
longer,
low enough.
higher and longer.
Possibly, yeah.
The Federal Reserve is still working on managing inflation, according to Jamie Dimon, CEO of JPMorgan Bank, who also noted that the U.S. economy is still showing signs of resilience.
I have all respect for Jay Powell, but the fact is we lost a little bit of control of inflation. Models didn't pick that up. I've always been suspicious of models, and when we use them extensively, I always say that you use a little bit of judgment too. And there's been a sea change. Governments are borrowing a lot of money, and you got to incorporate that in what's taking place. That means they're spending it. That's inflationary. Wages we've seen come down, but not so much.
Right.
Oil and gas will probably be going up because the investment has been curtailed.
Right.
And the green economy, we think it's close to $4 trillion a year of additional spending. So you're talking, and the IRA Act, which I think has a lot of good stuff in it, the Infrastructure Act, the CHICS Act, this is huge money. And so, you've had a sea change. And I think we should all get adjusted to that. And, we'll have more normalization of interest rates, and we'll be fine. Just remember, America's most prosperous on the planet. We'll be fine.
While it might take the government's central bank a while to reach its target of 2% inflation, Dimon himself stated that he anticipates interest rates to potentially stay higher for longer.
Percent inflation, are you there for that?
No, I think it'll take a while. I just don't think
so.
It'll come
Rates
down
longer,
low enough.
higher and longer.
Possibly, yeah.
Okay, well,
Yeah.
That hurts. Will that hurt lending? Will it hurt the what you're trying to accomplish on 52nd Street in Philadelphia?
All things being, it won't do anything we were doing here. It won't change our plans at all. All things being equal, it might be slightly worse for the economy. There's still a chance for a soft landing.
Right.
I wouldn't take that off the list of possibilities.
The CEO of JPMorgan said he is pleased by the robustness of the American economy, so he isn't now pulling out the recession playbook.
So I know you have to worry about recession. Over the big panoply that you have. Do you tell people, listen, batten down?
I tell people not really. Yes, on certain things, but for the most part, no. But we always have a recession playbook where you might do a certain credit.
Well, you're breaking it out right here?
Say it again?
You're breaking out the recession playbook right now.
Not really.
No.
Right now, the U.S. economy, this is the contradiction here.
Okay.
The U.S. economy right now is doing quite well. Consumers have a lot of money. They're spending it. Jobs are plentiful. I think it's fabulous, by the way, that wages are going up for the low end. So I get a lot of complaints from CEOs about that.
Oh, but that's inflationary.
But they haven't had a pay raise for 20 years.
No.
And so, here, our minimum wage is something like the 40th percentile of all Americans, and they get dental and medical and things like that. But it's wonderful. That's today. Out in front of us, there's some scary stuff. And you and I know there's always uncertainty.
Right.
That's a normal thing.
Okay.
This uncertainty is a little bit more than that.
These statements diverge from Dimon's earlier ones from October. He predicted at the time that the U.S. economy will most certainly enter a recession in 6 to 9 months. He predicted that a recession would hit this year in December, claiming that increased inflation was eroding consumer wealth.